Okay, so we'll go ahead and get started. Once again, my name's Brian Martinez. If you haven't met me before or spoken to me, I'm a senior development rep here at NewView. And a few things about NewView. We are not lawyers. We're not CPAs. We are actually non-fiduciary. Our clients, they come to us and tell us what type of assets they'd like to hold in their IRAs. We're a self-directed IRA custodian, also known as a third-party custodian. All the information we do provide is for educational purposes only. So we do not, condone or solicit any of the investments that we do provide to you. This is all up to you to do your own due diligence for these investments. So a few things about NewView. So we've been in business since 2003, a little over 17 years now. We have two offices. Our compliance office is based out of South Dakota. And then we have our operations office here in around the Orlando, Florida area and Longwood, Florida. We custody almost 1.5 billion under client assets, which is huge. It's a big stepping point for us to keep growing, especially during COVID. We've been thriving. So we're a regulated public trust company. There's a lot of self-directed IRA companies out there that aren't actually regulated and are trust companies. So that's definitely something you want to take in consideration. And one of the things we do take a lot of pride in is that we are simple to do business with, we're available, and we are responsive. We actually get graded on answering calls and emails. Every Monday, we reflect, were we able to answer the phones 99 to 100%, and that would be a perfect score for us. So we'll go ahead and continue forward. I'm really excited to introduce our guest speaker today. His name is Artem, and he's the founder and CEO of FarmTogether. He has over 12 years of experience in food and agriculture in Farmland. And prior to founding FarmTogether, Artem was an employee and a CFO and vice president of an operations of a Full Harvest Technologies, which is now post-series A B2B platform for buying and selling produce. And previously he worked at Ontario Teachers Pension Plan, Sprott Resource Holdings. Artem holds an MBA from the Wharton School and a bachelor's and master's in economics from the Higher School of Economics. Without further ado, I'm happy to introduce Artem.
Thank you, Brian. Great to be here. All right, so let's get started. So Brian, I think I need your help with the deck because it's not showing up.
If you click the screen just once, now you have control of it.
Okay, fantastic. All right, so let's get started. Welcome everyone. Thank you for taking the time. Really excited to see so many people interested in farmland. It's the oldest asset class, as we like to say, and the new is the well-forgotten old. Farmland is the oldest asset class in the world, and it's really how a civilization started. So it's always fun for me to hear when someone says, "Oh, what are you working on? Farmland? Oh, that's such an exotic new thing." But it's definitely kind of being rediscovered. And FarmTogether is a data and tech powered farmland investment platform to bring new opportunities in the farmland space. Our vision is to provide all investors with access to farmland investments and farmers and landowners with access to capital. And our mission is that we recognize farming is honestly the single most vital industry on our planet. So we want to drive sustainable and prosperous food systems that work for everyone in our globally connected world. The team comes with rich experience in the ag and finance and tech space. We worked at some of the largest farmland investment funds in the world. We worked for some of the largest ag companies in the world, some of the largest institutional investors. So we bring to you that institutional professional experience of how to think about farming, how the best investors think about farmland. What's really important to note, farmland is a really powerful engine for impact. If we look at UN Sustainable Development Goals, farmland touches 8 out of 17 of those goals, and we can, through investment in one farm, really move forward the needle on all of them. So it's really exciting. So let's talk about why farmland, what it is as an asset class, and why is it even kind of, why is this interest in farmland rapidly growing? There's a much bigger backdrop that you may be experiencing, that definitely institutional investors are experiencing, is that everyone is now in dire need of yield and diversification. The interest rates are falling, everything is becoming correlated, it's becoming harder and harder to build a truly all-weather diversified portfolio. And so because of that need, a new mega trend that probably will, in a way, define at least the next few decades is alternative investments. And this is really everything from real estate to infrastructure to timber. We have seen already an explosion in this segment of the market, reaching from 3 trillion in 2008 to 8.8 trillion in 2017, and projected to reach 14 trillion in 2023. And that's just the beginning. Really, more and more sectors and asset classes are becoming investable. And if you're looking for strong returns in the next decade, then you are strongly encouraged to check out alternatives. JP Morgan recently put out a research showing that the traditional 60-40 portfolio, which is stocks and bonds, that's been popular in the last decades, is expected to only yield 3.5% annual returns in the next kind of 5-10 years. So you really, if you're looking if you're looking at the past as a way to replicate those results that we had, it's going to be really hard to achieve something meaningful. So if you want returns that are more in that more attractive range than 3.5%, you really are encouraged to look at alternatives. So farmland is one of those alternatives. It's really an incredibly attractive investment. When we look at the historical results, it's done tremendously well in the past 50 years, 12.2% annual returns composed of price appreciation and income from the rental of the land, or from the income from the land. And that's how most of farmland actually works as an asset class. We'll talk a bit about it, but it's kind of a bit of a real estate product where you rent out the land to the farmer and they pay you rent. So 40% of farmers actually rent it today, so it's a very common practice. Farmland volatility has been quite low at only 7%, and we'll show you the comparison to other asset classes. And then what's most important, it's uncorrelated to most other asset classes. In fact, it's negatively correlated to some of them at minus 0.25, which is often very hard to find, and it does wonders to your portfolio diversification. And then lastly, of course, the long-term tailwinds are known to all. They're quite compelling. It's growing population, it's improving diets, and it's decreasing supply of farmland due to urbanization, due to climate change, due to some disruptions in trade flows. So all that is leading to a decreasing supply of farmland. In the United States alone, farmland acreage decreased by almost 14 million from 2012 to 2017. So that's in just 5 years, which is actually more than twice the size of the state of Massachusetts. Comparing farmland to other asset classes, I'll just pause here for a little bit so you can take a look through it, and I'll talk through some of them. I think farmland, as you can see, is most similar to listed real assets, quite similar returns, although farmland did a little bit better, low volatility. And if you look at the Sharpe ratio, which is returns divided by volatility, it's really quite attractive. And that's how professional investors look at this. U.S. equities, which we often look at the S&P 500, how that is doing. Long-term returns have been only 6.8%. Of course, last couple of decades have been better, but what it means is that you're also prone to more volatility. And of course, we're not saying that you shouldn't invest in equities and bonds. We still think that the core of the portfolio should be in those markets, but it does have quite high volatility. And then you can take a look at other asset classes here as well. And I believe there'll be a recording available of this presentation afterwards. Looking at the last 10 years as well, to show kind of the returns here, farmland has been quite stable. It had a few good years, like really good years in the early part of the decade, and then sort of more stable returns in the upper single digits in the last 5 years. And you can see the volatility has been quite low, whereas gold had some pretty negative returns. Bonds had a couple bad years. Stocks, of course, had quite a run, but we've seen sort of the volatility in 2018 and now, and we'll talk more about sort of the recent returns of farmland. This is just a kind of in numbers where farmland has fallen. Looking at correlation, let's see, we have a slide here. Looking at correlation of farmland, okay, just talk through it. It's most correlated to real estate, and we have already seen this completely decouple in some segments. As you can imagine, places like New York, San Francisco have seen the rents collapse, the prices are under pressure, whereas farmland has been very stable. So we've seen that connection kind of disconnect as well. Talking about farmland a little bit more, there's two types of farmland. There's the row crop farmland and permanent crops. Row crops is your corn, your soybeans. It's typically really hard to kind of screw it up. And what I mean by that is that there's not really anything, kind of no trees planted, there's no equipment there. And when we talk about land, it's also important to know that we're really talking about kind of the land, the soil. It doesn't include processing facilities, elevators. It's really just the land. And so if you look at row crops, you can see how incredibly stable the returns have been. See if I can zoom in here. Oh, there you go. The income from row crops has been almost like, I mean, better than bonds in some regard. Look at how stable it has been, about 5% plus and 92 slowly going down as the rates have come down and prices for farmland have increased. And so then you also get periods of sort of moderate price appreciation, and then some periods when the commodity prices go up of higher price appreciation. We've seen corn prices shoot up from 3.25 a bushel, something like that, to almost 4 a bushel, really a high increase in the last months, which eventually the sort of long-term price appreciations flow back to the value of farmland. But there's also systematic drivers of price appreciation that work over long term. When we look at productivity increases in farmland, since 1947, we have seen 3% plus increase in yields annually. So there's this very persistent long-term improvement in the value of farmland and how we kind of more and more value that we can get from land. And this is, green revolution. This is things like variable application of fertilizers. It's the drip irrigation, all kinds of different techniques, ag tech now being the new one, remote sensing, all that leads to the long-term value appreciation of farmland as well, because when your land produces more food, it's more valuable. And then on the right, you'll see permanent crops. So permanent crops is your apples, your tree nuts, your citruses. It's all the farms that have trees on it, so it's a permanent planting. Now those have occasionally spikes in returns. You can see 2004, 2013 has been tremendous, but you also have more volatility where occasionally you get lower, you get actually prices falling down. And so within farmland, we also preach diversification, where we encourage you to have both row crops and permanent crops. But if you're looking for higher returns, you don't mind more volatility than permanent crops it is. If you're looking for something stable, long-term, kind of very predictable cash yield, row crops are kind of your go-to. Now, of course, you pay for that lower risk and lower volatility by taking lower income as well. So we think both have place in your portfolio. One thing I want to highlight is actually how well farming has done in periods of inflation. Right now, we have a lot of investors that have invested in some of our last deals that are worried about this all money printing. They're worried about inflation. And farming has done tremendously well in the last 5 periods of high inflation, outperformed the S&P 500 by almost 34%. And that's because ownership delivers benefits of commodity price inflation. Row crops are used in thousands of consumer products. Permanent crops are part of the inflation basket as well. So it's really, farmland has done tremendously well in those periods of high inflation, even better than gold. It's actually amazing, but it's even a better hedge against inflation than gold. And then specifically, FarmTogether targets only United States farmland. The reason we do that is because we want to play to what farmland is, to the advantages of farmland as an asset class. Here's what I mean by that. Certain asset classes lend themselves better to certain strategies. If you're looking for ultra high risk, high return investments, you might look at startup investing in venture capital in tech stocks. If you're looking for safety and stability, you might look at high grade bonds. And so farmland is sort of that bond plus product in our view. It's really, we focus on capital preservation, on inflation protection, so capital preservation in real terms, and from that defensive position on how can we get you income, how can we get you price appreciation. And so US is great in that. Strong rule of law and property rights, excellent water and soil that actually cannot be manufactured or transported in a meaningful way. Water export is sort of when you export grains and when you export almonds, in a way you're exporting water. So that's a way that you can trade water indirectly. The infrastructure is actually amazing. US has the lowest cost of transportation of freight via rail. That's freight, not kind of the sort of not people. The people is a little more expensive. Tremendous river infrastructure, the Mississippi, and then of course the ports. So really great surrounding ecosystem as well. The US farmer is the most innovative, most productive farmer in the world. They're just tremendous innovators. And then because of that, US is actually the lowest cost producer of row crops in the world. A lot of people don't know that, but we are. And when you're in what is at the end of the day, commodity market, you want to be the lowest cost producer. And by the way, having said that, of course, there's sort of a commodity aspect to it, but the brands that US has, global brands, are very strong as well. The USDA organic label is very well received around the world, 100% organic. US beef is considered premium in a lot of parts of the world, so we definitely have done a great job in creating that premium, non-commoditized brand of our products as well. Just a little bit to set context of kind of why this hasn't happened yet and where we are in sort of the overall farmland market. Farmland is a huge market, 2.5 trillion in US. Most of it is actually owned by families. And 60% of that is owned by families, operators, owner-operators, farmers. Only 2% is owned by investors. The reason for this is that besides the proliferation of private assets that we talked about and alternatives, it's this changing trend in supply, demand, and in ownership. There's a tectonic shift happening in how we own land and from when we compare it to history. Because of the average age of farm approaching 60 and next generation not wanting to farm, about 70% of US farmland is expected to change hands in the next 20 years. I mean, it's a huge amount, almost 90 billion a year, 100 billion, if you count the price appreciation that will happen in the last 20 years. And a lot of that farmland is actually going to outside investors, owners, because kids that inherited don't want to farm, and suddenly that farm becomes by far the largest part of the savings, the investment portfolio. And then at the same time, we talked about the trends here in demand and supply for food. And what's important to note here, kind of why is FarmTogether set up the way it is in this tech-enabled way? What is different about us? Why do you even need technology to invest in this market? Well, the thing is that most farms are not this huge, farming operations owned by corporations or by billionaires. It's really a patchwork of very fragmented farms. It's a very fragmented market. In fact, 70% of US cropland is in farms less than 5,000 acres in size or less than $10 million in value. So what you see on this picture, that's literally how all farmland look. And look, I'm sure a lot of you, I mean, no one's flying now, fewer people, but when you fly, you look out the window and you'll see this circles or squares, and that's most of land. So in order to access opportunities at scale, in order to sift through literally hundreds of opportunities and choose the best ones, we actively use technology, everything from imaging to natural language processing to speed up analyzing the legal documents to how we set up the platform itself, which is very easy to use. Everything's online, electronic, tech enabled, to lower the cost of bringing a farm to you, the investors, to lower the time it takes you to invest and to lower the cost of capital, and to the farmers to give them better pricing than they otherwise would for their farms. You need to use technology. And I encourage everyone to check out FarmTogether.com. It's really very fast, very easy to use, and very easy to understand as well. We have a great learning center that gives you much more information than on this webinar. This actually was my next slide, but it's everything is online. The kind of just to talk a little bit through the legal structure, it's very simple. You invest into an LLC that's incorporated in Delaware, and you buy a unit in that LLC. So it's what we call bankruptcy remote ownership. The administration of the LLC is done by a third party called Assure, which manages over 5,000 entities. Some of you might know them well. So they provide all the kind of K1s, all the tax documents, all the payouts, and the operator has a contract to operate the land, or it's a rental model. And then in the unlikely event that FarmTogether goes under, the fees from each deal will be distributed to a new operator, a new manager, and there's plenty of those that can take it on. So really giving you as much of that direct ownership in the land as possible. Now, I want to just, we keep talking about farmland, give you a very specific example of a deal on our platform to give you a sense of how it actually works, and run you through sort of a live case, if you will. So this is a hazelnut orchard, and it's in Willamette Valley of Oregon. So Oregon is a very attractive place which has great climate for hazelnuts, ideal soil, water, a really high quality, high yielding production. There was no hazelnut crop failures in Oregon due to more stable climate, and so it's a really attractive place to grow almonds. So we were able to find a property with a great operator where we buy the property, we develop it. Well, the operator develops it, and it's 220 acres of planted hazelnuts. You, as an investor, receive actually a rent once the property is mature. And in 12, so this is a longer term hold, but farmland lends itself to longer term periods. I do want to highlight though that we're working on a secondary liquidity market. Actually plan to have a pilot transaction in Q4 of this year, so this quarter, and we absolutely expect an active secondary market to develop over the next few years. We've seen this with a lot of success in other platforms in real estate. So there's nothing really holding us legally, financially, technologically to have a secondary market. So, it says here 12 years. We'd expect you to be able to trade back and forth in those in that investment much sooner than that. But this specific deal is a 12-year hold. Then it would be a sale. What's exciting that the cash yield of 5.1%, average cash yield, is all locked. Most of it is contractually locked in, and then you have some exposure to the prices. And then the exit net proceeds at fairly conservative cap rate of 7.3%. So it's an interesting deal with a great operator that is developing a number of these orchards with us in the Willamette Valley in Oregon. So we know them really well. They're highly professional, well capitalized, and hazelnuts are used by some of the largest food producers in the world, the confectionery companies, Nestle, Mars, Ferrero Rocher. The demand for hazelnuts is growing due to its use in more and more confectionaries in places like Europe. So this is a deal you can check out on the platform right now. You can go on FarmTogether.com offerings and just learn more and get a real sense of what this deal looks like. You can watch the webinar as well, shoot us questions. And this deal is already about half of it, a little bit more, I think, is funded. So do hurry up. With that, I think we have maybe another 5 minutes, and I'll probably pause here for questions.
All right, Artem, thank you so much for that. That was a lot of great information on a different type of investment we haven't had anybody speak on before. So we'll go ahead and open up to Q&A. If you guys have any questions, go ahead and type them in the Q&A section. We'll start with the first one. Okay, so how does farmland investment returns compare, syndication real estate investing, whether in multifamily, office, or industrial asset classes. And this person says they believe that returns are higher and investment periods are shorter compared to farmland investing. Can you elaborate?
Yeah, absolutely. So the returns in farmland and the returns that we offer are 8 to 15% with an 8 to 10-year time horizon. I can't speak to sort of every real estate deal out there. When we look at the risk-adjusted returns, it compares very favorably, and sometimes it's higher than certain types of real estate. For example, multifamily. This is the overall return of the asset class as well. So you have to take a look at the risks. And as we have seen, why we always preach diversification, the real estate returns, you might be at the risk of losing some or all of your principal if you are in some real estate that is in sort of high risky areas like New York right now. But overall, the downside protection in farmland is quite high. So we're not trying to outperform every asset class out there. This is the safe and stable part of the investment. Having said that, we're also expecting a fairly high return deal on a platform soon, so stay tuned. But yeah, you'll be able to take a look at that. There's also a question I wanted to address on I was talking about the decrease in supply of farmland. So from 2012 to 2017, United States lost 14 million acres of farmland. I think there was a clarifying question there on what it is. Yeah.
Okay, let's go ahead and go to the next question here. We have quite a few. What are the risks or downsides of these types of investments?
Yeah, absolutely. So there's as with any investment, there's a number of risks. We, of course, the main ones that come to mind is water availability, climate change, and weather. We underwrite for climate change. We spend a lot of time on water, and we do a thorough analysis of the water availability there. On the weather, it's typically kind of the areas we're in. It's either kind of stable weather climates. Sometimes you might get weather events that will lead to lower yields, and that's reflected in the volatility of the farms. In row crops, the exposure to weather is much lower. The farmers pay rent up front for the year, and you have no exposure at all to the harvest or to the yields. You only have exposure some of it to the pricing. So zero basically exposure to weather, at least in the short term. And then of course there's other things like in real estate. You want to make sure you're buying at the right price. So we always take a look at comparables. We do discounted cash flow analysis for every deal to make sure that it's going to has income potential as well. For the purposes of this call, because I see there's a lot of questions, I want to direct you to our risk paper on the website. For every deal that you look at, there'll be a risk returns risk reward spectrum where we rank every deal and highlight the main types of risks, and you can learn more of that on the platform.
Okay, the next question is, instead of participating in a syndication like this, can I buy farmland directly and have someone manage it and give me the rent?
Yeah, absolutely. So we have a what we call a bespoke program. So it's investors who want to buy a farm in their own name and be the sort of sole investor. I believe you can still put it into a self-directed IRA actually. But yeah, we can absolutely do that. Yeah, get in touch with us.
All right. Let's see the next question. I'm going to go ahead and read the question, but you're going to have to take this one offline. Somebody would like to know what's the minimum investment allowed. So that one you would have to reach Artem. Go ahead and reach out to FarmTogether or to their website. You can reach them directly, and you guys can discuss that one offline. The next question: do government subsidies impact returns?
Not really. No. Permanent crops are mostly not subsidized. Row crops, the subsidies flow mostly to farmers. So there's of course long-term connection of subsidies to land values. But look, I can tell you that every government in the world has some support for the farmers. It's a question of national security, and especially United States. There was just an article in Financial Times where farmers took the first place in the most respected profession in the sort of in the mind of the U.S. People, even higher than firefighters, veterans, military. So it's the most, and it enjoys bipartisan support. I mean, it's almost a death sentence for a political party to touch farming subsidies, and it's an important kind of, the reason we have subsidies is because it meets important nationwide goals and supporting production of our food industry. And it's a U.S. agriculture is a global powerhouse, so it's a part of it is also supporting the farmers against other sort of quote unquote non-market or beyond pure market policies that other countries have. So it's a we don't expect subsidies to go away or change anytime soon. In fact, the latest farm bill was passed recently. I think it's every 4 or 5 years, so at least for the short term, everything is kind of set. Yeah.
Okay. Will you be expanding to Colorado?
We do look at Colorado from time to time, but nothing quite yet. But definitely plan that. And Brian, also just I think there's a lot of people asking about whether this is IRA eligible. I mean, we're doing this with you guys, so yes, this is absolutely IRA eligible. A question about UBIT, which is a type of tax. Yes, sometimes there will be UBIT. But first of all, you should look at your investment from a kind of total return perspective. And I mean, UBIT isn't really an issue for a lot of our investors. Accountants are getting more and more comfortable with that. I'm sure NewView is planning to roll out some things there as well in the future. So don't worry about kind of that much. But of course, we encourage you to consult your tax attorney. But from an admin perspective, that hasn't been an issue for our investors and for us.
Yeah, exactly. So this is definitely something you can do in IRA. You should always crunch the numbers and see exactly how UBIT would affect your returns on investment. That's something you would have to do on your own. There are webinars that we have on our blog that you can watch that go in more depth on UBIT and UDFI and how it affect your investment. And then there was a good question here too. What is the current value per acre in the hazelnut farms?
Good question. I mean, it's very specific. Maybe if you can get back to me. It depends on the maturity of the hazelnut farms, on the region. So, but it's above 10,000. Yeah, I think it's if you can just email us, we can get you that information.
Okay, let's see. This next question is 3 parts. What has been the volatility of farm and agriculture recently?
Yeah, so the last few quarters, let's just talk about last 3-quarter returns. In Q1, this was I think the 3rd quarter in his history of the Farmland Index, or something like that, where it was a negative return, minus 0.1%, as all the markets collapsed by 30-50%. In Q2, Farmland fully recovered. It was 0.6% return, and then Q3 we actually had continuous recovery, 0.9% return, which is kind of flattish. But given everything else happening in the world, I know we had a huge rally in tech stocks, but also a lot of like real estate REITs down 70%, travel, airlines. So kind of take your poison. But yeah, Farmland in this recession has performed just as it has in the last recessions, very stable. I want to mention in the last sort of great financial crisis, 2007, 2009, Q4, 2007, Q4, 2009, Farmland was actually up as an index, a total of 23%. So once again, demonstrating tremendous resilience to kind of those those periods of falling stock market prices.
Okay, the next part of that question is, if the United States doesn't support farm commodity prices, what then would be the alternative?
Sorry, I'm not sure I understand the question.
Yeah, I'm not sure if I understand that one either. If the United States doesn't support farm commodity prices, what then?
Yeah, sorry, I'm not sure what the question is
All right,
asking.
we'll go ahead and go to the
Maybe
next one.
maybe they can clarify it.
Yeah, go ahead and reach out to Artem one-on-one. He might be able to dive deeper into that question for you. Are there certain states that are more relaxed towards agriculture taxes when investing in agriculture?
So you don't pay agriculture taxes, you pay property taxes. And of course, if it's um, an operating, so if you invest in operating entity where sometimes we'll have a direct operated model where the farmers will be doing everything and you get the income from the farm, then that flows, kind of that income flows directly to you. And so your tax, this is a pass-through entity. And by the way, this is fully kind of LLC, so you carry no personal liability beyond your initial investment. You're fully kind of liability protected. And then the taxes are the taxes that you pay in your IRA. Well, you don't pay taxes in your IRA, but it's sort of your personal tax rate is what you'll be taxing on this income. But of course, different states have somewhat different tax laws and sort of total tax burdens. Some of them might have, of course, property taxes. Mostly it's property taxes, actually. Um, so that's the main one to worry about. On every deal, we'll disclose that, we'll explain that. So it's really going to depend state by state and even property by property. I do want to mention we're actively looking also at QOZ investments, so that for those familiar, it's a new type of tax advantageous way to invest into special opportunity zones. Whole other topic, but that might be sort of another tax advantageous strategy opportunity.
Okay, interesting. Few other questions here. What is the minimum size parcel you are buying?
It really depends on deal per deal basis, but yeah, I think the lowest we've done has been maybe like 20 acres.
Okay, this is more of an opinion question. Do you like permanent or row crops the best?
Yeah, so I think I touched on that. That of course we don't like one or the other one. We really trying to bring good investment opportunities to different types of investors looking to achieve different financial goals. And I touched on the row crops and permanent crops and the benefits. I of course like both, and we offer both on our platform. So it's really more up to you on what goals you're trying to achieve, what portfolio you have, and we can subject, of course, to legal limitations, work with you and help educate more on those types of opportunities. Yeah.
Okay, what high yield crops have you seen in the mid-Atlantic regions like Virginia?
We have not looked yet at Virginia at all.
Okay, can you elaborate on how investors are able to capture appreciation of land and produce sale price in the deal?
Yes, so the way it works is that when you buy a farm, you receive current income that either comes from rent when we're renting out to the farmer. Sometimes it can be a revenue share where you also have exposure to the yields that the farmer achieves and the prices. Sometimes a profit share where you're participating in the profit of the deal, or it's a direct operated model where you get all the price move, all the sort of profit, and all the costs are also kind of borne by the entity. Um, the way you capture price appreciation is that typically the hold period is 8 to 10 years. Um, is is the hold period for the farm, and then when we sell the farm, we expect the price to have appreciated. We buy the farms that are selling below market. There's also long-term trends in why farmland values are growing that we talked about. If the trees mature, we do improvements. All that leads to higher price of the farm, and so at sale you would capture that the sale price. Yeah.
Can you show the slide that shows the individual investors' flow of money again?
Yeah. Let's see. Yeah, and while showing that, I think there was a question on also how many deals we've done and sort of our track record. So our team, combined experience, we've done over 1.2 billion of transactions as a team. The company is 3 years old almost. We went live a year ago. So right now, we also have some deals that are off the platform, so we don't disclose kind of the total amount, but I can tell you, it's been over a dozen deals and tens of millions of dollars so far this year alone. So it's let's see, where is it? And this is the slide. Yeah. Can we make it full screen? Okay. And Brian, you can take care of that.
Yeah, I got it. While we're doing that, why is income for row crops declining even for years of higher appreciation?
So the income is calculated as percent of the value of the land. So as the prices go up, the the rents don't grow by that as much of that amount. And that's why you kind of see the income as percent falling down, but the actual dollar amount keeps increasing. But it's basically, if you think about it, farming costs 10,000 an acre, your rent is 300, 400, 500 an acre, that'll be 5%. Then the rent went up to 600, but the land value doubled to 20,000. Then your income will show only 3%, but your cash income actually increased. And the reason that you see that disconnect is because as the interest rates have fallen, the cap rates have fallen as well. So people are paying more and more for that rental income in terms of the price. So before you would pay, let's say, back in 92, you would pay like 20 times the rent. Now you're paying at 3%, you're paying 30 times the rent or 25 times. So it's same in real estate, right? The cap rates are falling down because of just the interest rate environment is so low. So that's why kind of mathematically it shows as if the income is falling, but it's actually increasing.
Okay. Is FarmTogether associated with Monsanto in any way?
No.
No association there.
Yeah, not that we know of. I mean, we work with different farmers. They use different grains, but we as FarmTogether, we have no association with Monsanto. I mean, no.
Is it possible to explain the fees associated with investing with you? So that you could take offline as well and go ahead and reach out to Artem, and he'll be happy to discuss what fees are associated with this investment type.
Yep. Yeah, a lot of these questions, great questions on sort of equity percentage, minimums, fees, all that is on the website on every deal. For this webinar, I really wanted to focus maybe on farmland as an asset class, make it educational for people. But yeah, please reach out. We also do monthly webinars as well, where you can ask any questions. This is great. I'm really so excited and grateful to NewView for doing this. I mean, there's so many questions. I'm so sorry we can't get to all of them. But yeah, please reach out and we'll make sure to address them all.
Yeah, so you could reach them at info@farmtogether.com. There's a lot of information on their page as well, a lot of educational webinars and blogs and articles. So that's a great place to get started. If you have questions about self-directed IRAs and how you can use an IRA for this type of investment, go ahead and reach out to myself as well. You can email Artem directly at artem@farmtogether.com. If we didn't get to your questions, I do apologize, but there's a lot of questions, and I'm sure Artem and his team would be more than happy to answer those questions one-on-one. If you do want to download our e-guide, go ahead and text capital SDIRA, your first and your last name. And that way you can download our e-guide. You would text it to 484848. If you want to contact myself, my email is bmartinez@newviewira.com, and my direct phone number is 407-519-9172. Artem, thank you so much for the information. I really appreciate you taking the time to come out and speak with our audience, and look forward to talking to you again soon.
Thank you so much. This has been wonderful. Really great to see this interest. This, I think, just shows how many people are interested in the new asset class, and it's so fundamental to how we live. So it's also, when you're investing in farmland, you're helping preserve it to be in farmland, you're helping to our farmers, you're helping national food security, and increasingly we'll see more and more impact regenerative organic deals. It's also helping the soil, the climate. So yes, anyway, wish we had more time. We should budget an hour next time, but thank you so much to you guys.
Thanks a lot. You have a good day.